The union budget will be presented in the next few days, and the expectations are running pretty high, especially after demonetization. Will there be a windfall gain? What is the sort of SOPs or stimulus that may come into this budget is something which the market participants are trying to expect. With me now is Gautam Chhaochharia of UBS. He's the India market strategist over there, and he has made the expectations for the union budget. Gautam, thank you so much for taking out time for us.
Pleasure.
Firstly, just going into the market with the talks that has been there around the budget, do you think that already expectation from the budget and what can come in is the expectations are very high?
Definitely, and that's what we term as near impossible mix. Very similar to last couple of years, actually. Interestingly, people are expecting tax rate cuts, more social spending, some boost to demand after demonetization, and obviously government is supposed to keep pushing for the capex cycle, given the where private capex cycle is. And at the top of that, global investors want macro stability, and local investors expect a continued low interest rate regime, which kind of indicates fiscal consolidation should also be there. So all these things obviously don't add together, and it's up to the government as to where it wants its policy stance to focus on.
Right, but some things like corporate tax rate which may be cut, you think that is something which may happen because it was already indicated 2 years back that corporate tax rates are declining?
So what he had said was that headline corporate tax rates will be cut, but it will be funded by withdrawal of exemptions. So it's not a cut or as a stimulus to the economy, but as a way of rationalizing or reforming their corporate tax system. So it's not necessarily a giveaway. We didn't see much on that last year. There were some baby steps last year. We can still do that, but that won't matter much for at a broader corporate or a broader economy level. Specific companies which have higher peak tax rates can benefit.
Right. In terms of just the tax rate, do you think that there'll be a lot of changes, whether it's the personal income tax rate or corporate tax rate, or is market already factoring in that? So
again, this is a tough one to say because markets obviously are expecting. So when you talk to investors, you look at the potentially impacted stocks and sectors, looks like markets are expecting some kind of tax cut at the personal level, but in our perspective, it has to be meaningful for any impact to be made. For example, if you increase the exemption limit by 25,000 rupees, it's a marginal issue. So you have to really restructure it or increase the exemption limit significantly for it to start mattering. And again, the basic premise is the fiscal space is limited and the objectives are many. So the question is where does the government want to focus on?
Right. So, say if we just assume that after demonetization there is a slowdown which has happened, that slowdown continues till Feb when the budget is presented, or majority of the data suggests a slowdown. Do you think a stimulus is needed for growth?
So what we've been saying is a stimulus is or will be needed by the government if there is a feeling or the view in the government that it is going to be a prolonged impact on the economy. So if the demand destruction is more prolonged and in a way structural, then government needs to step in. If it is just a demand or impact or slowdown just because of a liquidity crunch, then hypothetically with the new currency being back in the system, that should be normalized. So I think what the government will be looking out is post the new currency coming back into the system, what is the on the ground trends? So the government sees that there are kind of a negative feedback loop building. So the way we put it is the prolonged demand impact scenario from demonetization can happen if there is a negative feedback loop developing. So obviously it impacts informal sector, but does it impact informal sector structurally, their business models where they stop doing business, cut jobs, and if that happens then it starts building a feedback loop even into the formal economy, and that's when the broader economy gets hurt for a prolonged period. So the government starts sensing that this is a kind of a prolonged cycle building up, then they will intervene. But just because of first 3 months of liquidity crunch or cash crunch led demand impact, I don't think the government will stimulate.
So, just going by 1st of Feb or, first week of Feb when the budget is expected, don't you think that, a lot of the data would not be available?
So hard data may not be available, but there are enough lead indicators. Government obviously has a lot of on the ground inputs coming in. One of the data points, for example, is power, just power demand and production. It is hard data. It comes with a week's lag, and that's been holding up reasonably well. So that does not suggest a big impairment because almost 20% or 25% of the power demand is industry, 40%. And if the informal economy is a big part of the industry, it should have shown up in the power demand production. It's not showing up. And similarly, you get monthly sales data, you'll get anecdotes here and there. So there will be some input for the government, And even if it wants to, whether it does in the budget speech itself or it intervenes at a later stage if needed, I would guess the latter.
Right. In terms of a stimulus being provided, last 2 years have been different because crude prices have continuously fallen. So that has given, some sort of space for fiscal spending or some sort of fiscal balance. But this time around, it's opposite. And they need to spend. So it'll be a catch-22 situation?
It is, and they have to supposed to reach the 3% fiscal deficit target. So 3.5% is for FY17, but the FRBM lays it out for them to reach 3%. So 3% target has to be reached. They have to spend more. And as you said, the windfall from the oil is behind us. So it will be tough maths, but it's not something which they cannot do. But if you're expecting the government to achieve all the various spending objectives, it looks a difficult task.
Right. And in terms of, how do you think, say if the budget is good and from 3 it becomes 3.3, 3.5 or slightly towards expansion, fiscal expansionary, do you think investors will take it negatively?
Not really. So again, from 3.5, if they lay out a number of 3.2, 3.3, even 3.5, so to say, I don't think the investors will worry about it too much, as long as it's not in absolute terms expansionary, that instead of 3.5, let's go to 4. Or 4.5, whatever that number is, then obviously it will worry global investors, because one of the things which have attracted India to many global investors, apart from long-term growth and reform story, is also macro stability. India has to doubt, unlike 13, as a country with strong macro stability, and that will be impacted if fiscal expansion happens beyond 3.5%. So again, you have to remember that 10-20 basis points is just optics. We're talking about significant numbers for it to matter to markets.
Do you think tax collections can be much better than estimates because of demonetization? The indirect tax numbers are decent.
So at this stage, it's fine. For FY17, numbers should be on track and possibly even make up for the slippage on the disinvestment part. But the key is whether the government gets more taxes in FY18 because of the income disclosure scheme, because of more formalization of the economy. So that's what effectively the government has been trying to argue when they did demonetization, that this will help formalization. So if that happens, that's an upside to tax revenues definitely. But you have to remember that, and what we have highlighted in a note also, extra spending, funded by extra tax revenues is not stimulus. It's just shifting money from one pocket to another. So it's stimulus if the spending is without taking away the spending power of the rest of the economy.
Right. Can you just explain that for our viewers in simple terms?
So if the people who are paying more taxes, they would have had the money if the government had not got the taxes, and they would have spent the money. But by paying higher taxes, the money is being shifted to government, and government is spending the money instead of those people. So at an aggregate level, it's not leading to extra spending in the economy, and therefore it's not a stimulus or not a growth driver in itself. It's just a shifting of spending source. So I won't call that stimulus. Stimulus will be if we are leading to fiscal deficit number being higher per se.
Right, and say if the stimulus is giving via cutting some indirect taxes, would that be a stimulus?
So that again, that's not a stimulus. So stimulus comes from simple fiscal deficit number. It does not come in tax cuts or in the form of higher taxes, whatever we look at it, higher spending. So it has to be extra spending leading to extra fiscal deficit, because that's how you create more money supply in the economy and therefore ability to spend more in the economy.
Right. And what would all this mean for currency, interest rates? Is the situation much better than what it was back in 2013? So a little bit of slippage would not, have a big impact on macro stability?
10-20 basis points should not matter. It's the more the trajectory and the communication part of the government. So if the government says that, okay, we'll stay at 3.5%, given the pressures from demonetization, given the weak environment, we want to support that, and we'll spend it judiciously in terms of, say, capex cycle, it should be fine. But they've expanded to 4%, then obviously worries will start again about macro stability, because the starting fiscal deficit for a number for India is still not comfortable. If you add the states 3%, 6.5% consolidated deficit makes India really stand out on the wrong side of the emerging markets or global markets spectrum. And it's very different from what happened in 08-09 when we saw the last massive fiscal stimulus. At that time, the consolidated fiscal deficit for India was around 4.5%.
This is state plus the center.
State plus center. So there is enough room for the government to intervene and stimulate. The room there is not now. So the room is not there now. Only way it can be justified is if the situation is actually extreme. So as I said, if there's a prolonged demonetization impact, more job losses, then the government has the argument and logic to intervene. But otherwise, in a steady state environment, very unlikely.
Do you think RBI will wait for the fiscal number before they act on interest rates?
So the conditionality in our view of the rate cut cycle linked to fiscal is definitely lower versus history, because we already achieved a lot of fiscal consolidation. We are not running at very high levels unlike 2-3 years back. And secondly, the inflation trajectory is definitely very supportive of more rate cuts. So at this stage, unless the government comes in and expands fiscal deficit, I would guess the RBI decision will be less impacted by whether it's 3.5 or 3.3 or 3.2, and will be more following the broader inflation data prints.
Right. In terms of capex story or public capex story, do you expect, as private capex is not picking, consumption is not, public expenditure would increase?
So again, same point. The government resources are limited, and I can see in FY17 we are not seeing that happening in a big way. But having said that, let me also put in another point. In our view, the role of public capex in the capex cycle or even in the macroeconomy is fairly limited. So while we focus a lot in terms of government trying to increase public capex, but capex cycles are always about private capex cycle. That's when the pickup happens. If you look at India's long history of public capex, it's a very, very narrow band of 7% to 8% of GDP. It doesn't move beyond that because the resources are limited. Government doesn't have the money to really spend a lot. So 10-20 basis point of GDP movement here and there doesn't mean much. So at a micro level it matters. So if the government is doubling or increasing spending on roads, it does matter for the roads sector per se, but not for the broader macro.
Right, but overall for the public spend or spending towards better capex, the government so far has done good, right? So
yes,
they did
definitely.
road, they did defense, probably even railways. Do you think another sector may be taken within the infra space and a little bit proper spend would happen over there?
Possibly, that's always a possibility. Government is also trying to push housing and irrigation. So roads obviously remains, railways remains, but roads also has faltered this year in FY17.
Right. So overall, what is your view? Will it be more towards spending towards infrastructure if any space is there?
So if space is there, that's what the government would like to achieve. But the space is not there in our view, given the also given the fact that the pay commission's allowances part may be need to factor in this year's budget, which could be another 0.2% of GDP.
Right. In terms of indirect taxes, do you think it will be meaningless this time because we are going towards GST? GST has been announced. Maybe it's 6 months delay or 1 year delay, but a lot of changes towards indirect taxes may not happen.
So any tinkering in indirect tax rates per se will be, if you have to think aloud, would be geared towards aligning it more with GST. So if they have agreed upon now or by then on GST tax rate structure, then they could already they could take the step in the budget to align the rates towards GST. For example, if they have decided that services will be taxed at this level in the GST on the different slabs, so wherever the gaps are, so instead of doing it one go in whenever they start implementing, maybe they do start doing it now itself for those particular areas.
And then when GST is implemented, it may not be as disruptive as some of the people are saying.
The transition time becomes longer in a way.
Right. In terms of capital markets, one of the key things is that what happens to the long-term capital gain tax. Say if there are minor changes, 1 year becomes 3 years. A lot of speculation actually going at this point of time. But say if there are minor changes, do you think markets are prepared for it?
So our view is that these things matter only in the short term. Ultimately, people who invest don't invest for the tax break. They invest for making money, making gains for the longer term growth story. Okay, so in the short term, people do react because of sentiment, because you want to make sure or make benefit out of the existing tax rules. So you could have short term disruption because of that, but I won't bother about it from a medium term trajectory for the market as such. No.
Right. Let's talk about some sectors and where some benefits are expected. So we already have a small benefit coming in for the housing sector, especially in the rural areas or low cost housing. You still expect housing to be one of the big focus?
So it actually has been, even over last year or two, we have seen the government trying to focus on this. Now again, the one challenge is obviously funding. The government's resources are limited. So how much more or disproportionate resourcing government provides to this sector still remains to be seen, because the targets which the government has announced are very, very ambitious, and the funding required for that is huge. And second is, again, like anything else in India, execution. How do you execute? Because housing also is not just a switch on and off. There's a lot of state government intervention, at the micro level. So those issues still remain, but definitely seems to be one of the clear focus areas, because the Prime Minister also focused his speech at the end of the year on that. Kind of indicates that it will be a priority area.
Right, and with rates coming down as low as 8% from SBI, or probably slightly higher than that, and with that some benefit coming for housing, that could be one of the big sectors to focus on growth?
So ultimately it could be. Housing or property in most economies plays a very, very crucial role, including in India. It plays a big role in capital formation, in job creation, in multiplier activity in the economic sphere. So it could, but again, as of now, the government is trying to focus just on the affordable housing segment. Now whether that starts to flow through and has a feedback loop into the more premium housing segment, that's not necessarily an obvious one. At some stage it will, but the immediate impact is how big a role it can have in terms of driving economy out.
Right, and in terms of housing and any benefits coming in, it'll still take some time before that sector picks up, so it's not like an immediate impact that you would see. There'll be a lag.
So as I said, so if you look at the low cost housing, the impact could be much more faster, but for the impact to be felt in the broader housing segment beyond the low cost housing, that impact will take time, because that is a longer feedback loop.
Right, and all of this would also benefit companies like Asian Paints, Voltas, and some of the house furnishing companies?
So home improvement in general should benefit if low cost housing or housing in general picks up, definitely. But again, you have to discern within the companies, within segments, because low cost housing is different versus broader housing pickup.
Right, agriculture has also been one of the key focus for the government, but this time around, based on CSO estimates, agriculture is expected to do very well. Still, you expect the focus to be on agriculture?
Definitely, looks like. Again, that tilt is very, very clear, and we're already seeing some early hints of that. For example, we have seen MSP hikes, again, nowhere near what we saw in 10, 11, 12, but higher than what we saw last couple of years. So MSP increases are slightly higher. Then whatever data we have picked up looks like the procurement activities are also higher. And Narega spend, that's higher after a long period of time. And it's already showing up in rural wages being positive in real terms after a while. So looks like the government is doing or intervening there, not in a big scale yet, but definitely the delta is positive. And if you connect all these dots, looks like it will be a focus area.
And in terms of agriculture, do you think that CSO number is factoring in higher number because of what you said?
Possibly. That also reflects the sowing data. The sowing data has been good, so it's a more advanced estimate for the CSO, so that they would rely on the sowing data, etc. Not what I'm saying. What I'm saying is more the policy thrust, not necessarily impacting real agri GDP in the near term.
Right, digital or going cashless has been one of the key things. Say if something comes on that, do you think it is something which the markets would like, as the economy itself would shift towards cashless?
So it will be a sentiment positive, again taken as a part of the broader reform narrative and the broader formalization narrative. So that will be taken positive sentimentally, but not necessarily in a meaningful way, because it doesn't have an immediate earnings impact per se.
But do you have expectation that benefits for digital may come in?
Possibly. Again, the thing is, when you talk about benefit, it's also always in the context of scale. Is it all slight tinkering, small benefits here and there, or is it going to be meaningful, which will really have an impact on the broader structure of the banking system?
Right. When you talk about banking system, one key thing every year that investors would look at is the bank recap. Yeah. How do you expect PSU bank recap, especially with what has happened in Jan and March quarter?
So I don't think anything changes dramatically versus the trajectory which they have laid out and versus what we've been seeing. So we will not build in a more aggressive recap trajectory, likely at this stage.
But do you expect a trajectory coming in, that what will come in over the next 2 years? Is the number already, what it is?
So it'll be what it is. So I don't think they increase it dramatically. I think they had laid out for FY18 also.
Right.
So that number is likely to be the same.
Right. And in terms of banks and trying to promote banks in terms of lending activity, do you expect some changes over there?
So that is already there in terms of all this priority lending, etc. Now what the government can possibly do more, what they have been trying to do along with RBI, is encourage more licenses, etc. I think that will be the route rather than anything in terms of specific incentives.
Right. So just looking at the entire discussion and what essentially markets are expecting, do you think that markets' expectation of a stimulus, of any major big changes coming in, is very unlikely into this budget?
So our base case is unlikely. it's too early to. So the stimulus would have come in now if the demonetization impact had been quite negative, which doesn't look like the case now. Whatever we've seen till now has been better than what parts of the market were expecting. And as of now, there's no sign that it will be a prolonged impact. It's too early. And secondly, if they stimulate now, then what happens next year? Right. Do they stimulate even more next year? Because elections are in 19. So if the logic is that they want to win political brownie points by stimulating growth, then possibly makes sense to do it next year than this year.
Right. Gautam, I know you always look at a bigger picture and what's happening towards the earnings side. But going into the budget, which sectors do you think would be in focus? Maybe if you could just go a little micro into them.
So again, as we talked about the various issues, so where will the government spend more? That's where the focus would be. So which schemes the government focuses on? Housing scheme would be positive for materials, would be positive for home improvement. Do they do a bigger dole out to the social sector? Will be positive for staples, possibly discretionary. Do they do tax cuts? Possibly positive for discretionary, autos and staples. So the focus of the market will be on trying to decipher where the government's focus will be a lot more in terms of allocating the scarce resources they have. And that's where the delta would be.
Right. In terms of, say, if it's not, if the budget doesn't focus too much on consumption increase, do you think it will be a big disappointment?
At the margin, yes, because again, markets are expecting that the government will try to provide a boost to demand in the form of more spend through taxes, tax cuts, or social or directed spending. So at the margin, yes, if the boost is marginal or minor, then there will be some disappointment surely.
Right. Every year in the budget, there have been some changes into FPI, FII, with some sort of changes. This time around, you think that it's already happened, whatever had to happen, and that would not be a focus of the market as to what is changing into the FII taxation?
I would believe so, because everything has been happening in parallel anyway in terms of clarification, etc. And GAR is supposed to roll out this year anyway, so there's no change in that. And there's been enough discussion going on ex the budget also. So there's no need for them to clarify unless some issues come up. Even there, if they want to clarify, they can clarify it separately. I think the more relevant issue would be more the long-term capital gains issue.
Right. Just a last word, to sum it up. For rates, for currency, for markets, how do you think the reaction would be, post the budget?
So if the stimulus doesn't happen, which means fiscal deficit remains at 3 or 3.5%, there will be some disappointment for some growth-oriented sectors, but I think broader markets, the impact will be nothing. Markets will take it at the margin positively because the macro story is intact. And therefore, the currency and rates will also be fine. And for rates, anyway, the budget will matter slightly less because the quantum of liquidity which is around right now, the supply of government number, that supply of government securities for next year, that number will matter less this year anyway.
Gautam, thank you so much for taking out time for us.
Thank you.
Always pleasure.
Thank you.